So I'm delighted to welcome you to another terrific panel. This panel is going to focus on the development of shipping finance, and it will provide us the point of view of those who are providing the finance. John Imhof from Vedder is going to moderate the panel. Again, we're hosting this event today in partnership with Citi, so I'm delighted to have Shreyas with us. And I'd like to welcome the two Evans, and Harris Antoniou. It's very interesting that later on in the day, we have another panel on finance that will provide a ship owner point of view and tell us how they are looking at the ship finance market. So with that, John, the floor is yours, and tremendous thanks to all of you for being with us today.
Oh, thank you very much, Nicholas. I really appreciate the introduction, and welcome everyone to the Financiers panel on ship finance. I'm John Imhof. I'm the co-head of Maritime Finance, Maritime team at Vedder, and a member of the Global Transportation Finance Group in New York. Vedder is an international firm with offices in the United States, London, and Singapore. I am really delighted today to be joined by some very well-known and highly regarded speakers who will address with us the topic of ship finance from the financier's perspective. They have decades of experience. I'm going to do a little bit of a round table here and ask each panelist to introduce himself and tell us a little bit about himself and his institution. Let me begin first with Harris. Could you tell us a little bit about yourself and Neptune Maritime?
Thank you, John. Thank you for the introduction. Great to be here. Nicholas, thank you for the invitation. Neptune Maritime Leasing is probably the youngest of all organizations represented in this panel, because we just got established last year, in fact, in May 2021, as a leasing company that will be servicing small and medium enterprises in shipping. We set out to do this because we feel that leasing is a very flexible and attractive means for owners to, in fact, fund the growth of their fleet. And as a result, we've been experiencing quite interesting growth and support from the maritime community. I think in particular, the next few years, with the growth of the fleet to cope with additional demand and the growth of the fleet related to the efforts to decarbonize, we will have a very significant demand for financing for the global fleet. Leasing is there to cover part of it, and we aspire to play a very large role in it ourselves.
Thank you, Harris. We'll come back to leasing. It's on my list of things to discuss, and certainly also decarbonization. Let me turn next to Shreyas. Shreyas, please tell us about yourself and Citi's role in ship finance.
Certainly, thank you, John. So I'm the global head of shipping at Citi. We've been active. When we say shipping, it's really shipping, offshore, and maritime logistics. So we include things like ports and container terminals as part of our mandate. We have had a pretty interesting couple of decades. I think we've been through the cycles. Certainly, my own direct team has. And of course, we're looking forward to the next stage of the energy transition and how that impacts our portfolio. But I think, as the overall group of shipping interested financiers sort of moves more into the leasing space, alternative finance space, and the traditional banks start shrinking, as I believe is going to happen over time, given where ESG is headed. I think that presents a lot more interesting challenges and opportunities for the people on this call and beyond.
Thank you, Shreyas. Evan Cohen, welcome. Tell us a little bit about yourself and CIT, please.
Hey, good morning, John. Yeah, you have to distinguish between the Evans today. So the most interesting thing about CIT, it's now a division of First Citizens Bank. So as of the beginning of this year, we were acquired and have been merged into First Citizens Bank, which creates an institution twice the size of CIT, so we've doubled in size. and still have a good, strong appetite for the maritime business we developed over the past few years at CIT. So that's good news. And for the owners listening, that means, yes, we do have a bigger balance sheet. And for the American banks, the cost of capital has never been the big issue. We continue to focus on mainstream assets. So sort of taking off from what Shreyas said, my mandate as the head of the shipping team is a bit narrower. We focus on tankers, container ships, and bulk carriers, and we don't go too far outside of that. But there is plenty of business to do there for lots of reasons we'll chat about. And some of our important clients are firms like the one Harris has started and managing right now, where we work with the funds, the private equity houses. And for the rest, it's been so long since, well, a lot of us have good histories and we know each other from different places. In my days at DBB, I had the chance to work with everybody on this panel. So
great, thank you, Evan. Evan Uhlick, DNB. Tell us what you're doing, please.
Yeah, so it's Evan Uhlick. So I represent DNB Bank, and
sorry about that.
And in particular, I run our Ocean Industries division within the Americas. Ocean Industries is pretty much a representation of Norway internationally, with 4 key industry verticals. The first is an oil and gas E&P vertical. The second is offshore energy, which is really separated into a services type business, as well as our offshore wind business, which is growing tremendously and really exciting things going on there. Third is our maritime business, which similar to Shreyas is fairly well encompassing and includes the ports and logistics element as well. And then last but not least is our seafood business, which also employs maritime assets. Taken together and maybe focusing more on the traditional maritime business, 2021 was one of our most active years in recent history globally. For now getting on the better part of a decade, DNB has really reorganized its business model into kind of a leaner, more nimble corporate and investment banking type franchise. And I think that's our continued focus as we move into 2022, is continuing to serve our corporate customers, which is inclusive of our private equity sponsor relationships, with a particular focus on the energy transition, which we view as even more important today, with the kind of increasing focus on energy security and the manifold investments that are necessary in infrastructure to continue to build it out.
Thank you, Evan. Great. We'll come back to energy security in a minute. But first, let's just jump right into it. This panel's part of the panel is intended to focus on capital needs of shipping companies and what the options might be, and what can fit into company toolkits and fits best with your strategies. Let me start by asking you, what are ship owners looking for these days in finance? Evan Uhlick, do you want to start that off?
Sure. It's quite interesting, and I don't necessarily think that ship owners have magically found religion. I think it's more just we are running right now in an area, in an arena where the total quantum of leverage, and I think the governance is far higher for ship owners. In addition to that, and I like how Shreyas used a multi-decade view here, the game has really changed from a senior bank debt and equity type of relationship to what we feel is a much more diverse, much more interesting, holistic kind of view of maritime finance, which allows very interesting structures like leasing, or the kind of cooperation of a junior and a senior lender in a structure to exist in this era. But again, I think broadly speaking, you're seeing much less new building activity, and you're seeing much more of a focus on capital discipline, running at lower total quantums of leverage. The other thing that I'll just pick back up on is, the few proud survivors that are still operating in this beaten down industry. Again, whether or not it's the banks that are still here or some of the new entrants, I do think there is fertile ground for the folks, for the financiers that have made it through this part of the cycle and are now kind of poised for better days ahead.
Shreyas, I see you nodding. What did you agree with there? And what can you add?
I think to contextualize where we are, I think we've all realized that a lot of investment is going to be required to take shipping into the future. We know that that is the case. We also know, whether we are comfortable with the thought, but we also know that the final consumer has to pay the price of that transition. How that cost goes through all the layers down to the final consumer is a mechanism that we allow market forces to determine, don't we? We are comfortable with it. We know it's worked in the past. The problem is we don't have time today to allow those transitions to take the multi-decade timeframes that it normally takes. So when LNG was first shipped, the risk of LNG shipbuilding was taken on by the oil majors because there was no way for startup companies to deal with that risk. But then it took us 30 years to have speculative LNG ships being built, for example. And now those do get financed because there are contractual cash flows backing that kind of risk. But now we don't have 30 years to address offshore wind farms, new methanol, carbon carrying ships, CO2 carrying ships, all of the new technologies that we're going to need. So here we are. We are talking about ship owners and their capital needs. But in my view, this is just a very, very small part of the overall question of how the energy transition is paid for by the consumer and who the winners and losers are in that process.
Thank you, Shreyas. So Evan Cohen, sounds like there's a lot of change going on in finance, and your institutions are all trying to figure out how to deal with that. How is CIT approaching all the change that is coming through in the market and trying to meet its clients, its customers' needs?
Yeah, there's definitely change is coming. And as Shreyas said, change is coming sooner rather than later. But the clients are still facing the same issue they've always faced, which is first, it's availability of capital. So the ships are still expensive things. They look like they're going to get more expensive, but availability of capital. Now, with us on the panel and some others, the capital is there. It's a little bit more available than it was a couple of years ago. But if from the ship owner side, there's not nearly enough players out there. So there's room to do more business. And then from the ship owner side, the second issue is always the cost of capital. So we see there's capital available at decent prices, and each of our institutions respond differently. I think there's pressure on all of us in terms of price, in terms of the cost. So from a domestic American bank has a certain cost of capital, a private equity has a different cost of capital, and I think we're all feeling the pressure to some degree. So I think those are the first two things most of the ship owners I meet think about.
Okay, thank you, Evan. Go ahead. No, I don't mean to cut you off. Go ahead.
No, where am I going to get the money and how much is it going to cost?
Yes, exactly. Let me turn to you, Harris. Harris, you mentioned that you're attracting a lot of interest from ship owners with your market offering and leasing. Tell us a little bit about that and how that might fit into a ship owner's portfolio of sources of capital.
Well, I remember, I think one of the first conferences that I attended was in London back in the early 90s. And, the question at that conference was, where is shipping going to get the funds needed, for the expansion of the fleet in the next few years? Because, the challenges that we face today are very much similar to the ones we faced 10 years ago and 20 years ago, because there's always a question, where is shipping going to get the money from to fund the expansion? The reality is that one way or the other, the markets are efficient, and to the extent that there is a dislocation, capital finds a way to flow to to those areas. And the reality is that, and we all know that because we've been bankers for almost 30 years, we know that there is a massive exodus, definitely from European banks when it comes to their presence and exposure in shipping. For regulatory reasons, plus idiosyncratic reasons, I don't think that's going to change, not in the short run to start with. And that massive exodus created that dislocation, and there's new entrants coming to cover that space. I mean, we've seen, and as a result, we've seen the growth of various funds that came in to provide credit to shipping, as well as the growth of ship leasing as an alternative means of funding the fleet. The Chinese have played a very large part in making leasing I would say, not even an alternative asset class, but more of a mainstream asset class. And it's my firm belief, after many years of experience in the sector, that leasing is going to play this role, and it's going to be one of the tools available to ship owners to fund the fleets and the growth. And I always draw this parallel, between the shipping and the aviation industry. Some of us have worked in it as well. In the 70s, the early 70s, aviation leasing was only 1% of the global aviation fleet. Now it's more than 50%. So within 40 years or more, it's more than 50%. And imagine how much bigger the fleet is today compared to what it was in the 70s. And I expect, for the reasons that I mentioned earlier, regulatory and capital flows, that leasing is going to follow a similar trajectory when it comes to shipping. It's going to be one of the mainstream sort of asset classes and financing methods for the years to come. And also because of the fact that we've seen a massive growth in available capital as a result of accommodative central bank policies. Obviously, the globalization that we've lived through in the past 30 or 40 years made shipping grow very significantly on the back of China entering WTO and everything else. Now that may be coming to a halt or a slowdown, but at the same time, the very positive signal that we get is that we have spending on resilience rather than efficiency. So that's going to help shipping again. We see that with the LNG business, of the past couple of weeks, but also very significant spending on renewables. And I would completely agree with Shreyas's comments earlier. The question is how we're going to make sure that we as financiers are going to help ship owners drive down or sail down that path towards a more renewable shipping.
Oh, okay. We've heard from you, Harris, sort of your focus on the market, and Evan Cohen told us about CIT's focus on the market. Let me turn to Shreyas. I mean, what offerings do you have at CIT for ship owners and to add to their quiver of arrows in financing?
I think it's a team sport. I don't think anybody wants to have 100% exposure to any particular sector or group of clients. We do all have our little parts to play. And the part that Citi plays is that we bring a large global bank with a presence in over 100 countries, that large, sophisticated shipping clients, offshore clients, and maritime logistics clients can actually move money from jurisdiction A to B with the least amount of hassle. I'm not saying it's without hassles, especially now with the geopolitical situation being what it is and sanctions. So I'll put that in brackets on the side of my comment. But what people do need is a large bank that allows the general trends of cash management, trade finance, letters of credit, revolving credit lending, and all of the flotsam and jetsam of corporate banking, traditional corporate banking products. That's what Citi provides. And so we do target the higher end of all of the sectors, simply because they are larger and more sophisticated and would like to use our machine as much as possible globally. Now, having said that, obviously there are sectors which are smaller and yet critical to the global economy and critical to the global supply chain. And I think, as Evan said, Evan Uhlick said earlier, there is a role for all of us to play within that. So even if, for example, offshore wind farms and their installation and servicing, that might be now a small sector, it is a sector that we would like to play in because it goes to our strengths in terms of allowing our capital to make a positive change in the world. And we want to make that positive change. So we have outlined various commitments in various fora. GFANs is the latest one, as you might have heard, where banks are committing to certain exposures. We would like to bring our capital to come in and make those changes. So size and scalability and sophistication, these are sort of the core elements of how Citi looks at the sector. It isn't going to double and triple in a very short time. Obviously, there are limits to how much you can grow within the space, and there is a great deal of technical expertise that one is looking for in our borrowers that gives us comfort that they know what they're doing. Because ultimately, I'm not the expert on crewing or technical management or commercial. I do rely on my clients to do that, but we are therefore self-selecting for those kinds of people in our portfolio. So it is a complicated process, and I don't think any one bank or institution or type of institution can carry this sector. So as I said, team sport, and with Harris and Evan Cohen, with the leasing space and with the doubling of CIT, as Evan Cohen said, we're looking forward to more cooperation in the space.
Awesome, that's fantastic. Let me turn it over to Evan. Evan Uhlick. You at DNB is a big bank and has a lot of things to offer ship owners. Tell us a little bit about that, and if I might use this question to kind of transition into the next, I'm going to ask two questions. What does DNB bring to the table for ship owners? And then second, what do you see as the biggest change coming for ship finance? We've got a lot of things that are out there that are affecting the industry and affecting the markets, everything from geopolitical risk and change to energy transition for shipping. Tell us a little bit about, you could answer those two questions, Evan. I appreciate it. Evan Uhlick, thank you.
Yeah, well, I counted more than two. So let me try to let me jump around a little bit, John. Look, I don't think this needs to be an advertising section for DNB here, but and this goes for all of the fine institutions and folks on this panel. But we have been here through the cycle, and in the great and immortal words of Tom Brady, we're still here, or still here actually really matters at this time. We are well known to our customers. We have the capabilities of a big bank in a smaller, nimble, industry-focused institution that's ready to deploy capital quickly and agilely for largest clients. I think where we want to position the business is again around this integrated corporate and investment banking model. We work seamlessly with our colleagues in a very tight structure. And I think part of what's exciting right now, both within an offshore energy context and a maritime context, and by the way, we're working with Shreyas' team on a lot of different fund situations, but the ability to deploy large amounts of capital quickly to support consolidations and or acquisitions, that is, I think, one of the more interesting and exciting facets of the industry right now. The industry has gotten some cash flows. It's returning to some semblance of normalcy from
I think we may have lost Evan. Can the rest of you hear me?
Yeah, we can.
Okay. Sorry, Evan. Your video seems to have frozen. But Appreciate it. Let me pick up on the second of the two questions I thought I asked of the many that I maybe did ask. What are the biggest challenges going ahead for ship finance? Maybe Evan Cohen, you can tell us a little bit about what CIT is seeing.
Yeah, okay. Let me take a running start into that. So the running start is we've had the luxury of working with everybody on the panel, so in different capacities. So as Shreyas said, it's a team sport. We're all playing different roles in it. We provide the senior debt, sometimes the lowest part of the capital structure, relatively the cheapest part of it. So what do we try to bring? We try to bring reliable senior debt, knowledgeable senior debt, but we have today 30 clients, let's say, and we're aiming over the next 24 months to have 50 clients and double the size of our exposure, but not changing the size of our focus. So again, tankers, dry bulk, and container ships. So some of my colleagues on the panel know that we dig in and really try to understand the clients, and we all play a role with those clients. So what are we seeing is the biggest challenge, are the challenges our clients face? How are they going to get crew in these times? Do they have enough crew? How are they going to meet their increasing compliance and regulatory requirements? How are they facing the challenge of the ESG requirements? So I think Harris alluded to it or said it earlier. Yeah, from the finance side, we've been through this before. Ship finance tends to find a solution. It's right now, my mind is more on, okay, what kind of solutions will our clients need? What challenges are they facing? Hope that answers your question, John.
Yeah. Thank you, Evan. Evan Uhlick, you kind of dropped out. I want to give you an opportunity to finish up what your thought.
Yeah, sorry about that. We're in the midst of a planetary challenge right now of trying to figure out how this energy transition will shape the world. I think the shipping industry has done actually quite an admirable job of providing thought leadership and trying to figure out solutions for our own industry to the great and serious problems of emissions. For me, the next phase is really, who's going to step forward and finance the new vessel classes, the new fuel sources. That is still a huge question mark in my mind. And I do think it will take a very brave institution that will be financing some of these new technologies. The hope is that we can work together collectively, both with multinationals as well as governments, committed financial institutions, but also ship owners, to try to figure out what this new technology is and how we can, as an entire community, find ways to reduce the emissions and bridge into the energy transition. I think for DNB, those are the biggest questions, and it percolates into our whole underwriting, client selection, and capital allocation processes when we think about how this next 50 years of maritime is going to play out.
Thank you, Evan. Harris, how about you? I mean, from your perspective as a in leasing and shipping, obviously there's going to be a lot of change to meet the energy transition coming, and how is Neptune Maritime adapting or responding to that change from its customers?
Yes, I mean it's sort of a very interesting question. Obviously, we are all figuring out how to answer the transition issue, but in shipping right now we have two issues to solve, because there's a very clear bifurcation in the market, and I refer to the fact that most of the larger financial institutions tend to service larger shipping companies, and as a result of that, the smaller shipping companies or the medium-sized shipping companies are left somewhat unattended. So, and they're the ones that provide the backbone for the world fleet. If my memory serves me right, I think it's 60% still today, 60% more or less of the assets, ships that are floating around are owned by small and medium-sized companies, not the very large ones. And obviously, we need to have an answer on how this company is going to be able to renew the fleet. Renew meaning not only with new buildings, but also, you know, replenishment, second-hand acquisitions, etc. So that's a role that is a very important role if we want the supply chains to continue functioning, because at the end of the day, we're talking about resilience, we're talking about the fact that ships need to be able to transport commodities around the world, and that's an essential function. So we are here as a Neptune Leasing to provide funding for the smaller owners as well, and become really the conduit that allows capital to flow either through investors or banks through Neptune to those smaller owners that are, you know, more difficult to access funding. So that's number one. Number two, when it comes to support for the transition that you talked about, obviously, you know, the very large, you know, investment grade shipping companies, the likes of Maersk or others, do have access to funding. Banks are still obviously very eager to deal with them, and as are the capital markets. So what we are trying to do is to not just provide funding, but also think alongside our owners and the management of those shipping companies that we work with, and help them in the thinking process towards this energy transition. That means we think alongside them in terms of technology, in terms of fuels, and in terms of retrofits. And I think, you know, if you ask me the question, how does, you know, leasing going to play a role in this transition, at least where we're coming from, we play a role in two ways. One is through being involved in understanding and financing new buildings that embrace those new technologies. And secondly, being involved in financing also existing vessels that would need to go through some sort of a retrofit process if they're going to comply with the regulations that are coming into play as of next year. So there is a transition period, as you know, of about 3 years for all the ships to become more compliant and reduce emissions or reduce speed. So these are the two ways we think about ESG and the energy transition.
And I can't thank you, Harris. That's
John, if I may add, I mean,
I was going to turn to you. I was going to turn to you, Shreyas, next. Please tell us your thoughts, and if you don't mind, add in a little bit of your thoughts on the geopolitical situation and its effect on shipping.
Sure. You asked the question, you know, challenge, and of course the opportunity is embedded in that. And I think, you know, Evan said planetary challenge, and all the comments that Harris has made about, you know, all the ignored SMEs in shipping, who are actually the backbone of what we're trying to accomplish. The point that I want to add here is that we in shipping as an industry have never had as much power as we have today in terms of where we have impacted the global consciousness of how important shipping is to trade, whether you want to talk about Evergreen and the Suez Canal, or whether all of the stuff that's happened in COVID. And despite all the disruptions, we still have kept global trade going at enormous cost to our seafarers, right? And I think that payment or that sort of investment that we have made in the sweat and tears of our seafarers should come back in terms of respect for this industry. And we have actually got that power today. And how we need to react with that power is we need to realize that whether it's the SME in the SME sector or whether it's the larger ship owners, we have got to stop quibbling about 50 basis points here and there, 100 basis points here and there. And we need to find a better way to get those costs moved up to the charterers so that, to my earlier point, those costs can be moved over to the consumers. And when you democratize that cost, it is literally pennies on the shop floor, right? So let's target our efforts in that direction. using our power to get this cost democratized at the shop floor. So I think we're not really doing that very well. I think we're still quibbling. We're still sort of stuck in the old ways of thinking where we didn't have power. So that change has to occur in the way we think. Now, that very rough segue into geopolitics. We've had these upheavals before, and there will be more to come. I do feel that the problem we have with geopolitics in the way it affects shipping is the law of unintended consequences and unforeseen connections. Somebody doesn't get paid on time. They might have a derivative that can't be margin settled. That brings down some part of their financing, and so on and so forth. A lot of things that could happen in a chain reaction that we have not yet seen. So I would give it another quarter to see where those sort of chain reactions play out. But in the geopolitical sanctions space, I think Russia, other than the obvious contribution of Russian and Ukrainian seafarers who make up, as I understand, 17 to 18% of our overall 1.5 million seafarer population, it plays otherwise a smaller role in the shipping aspect. Of course, if you look at wheat, and I think all of us have looked at all the statistics in the last 4 weeks, we've become experts on where the commodities come from. That is obviously a massive impact on the global dry bulk fleet. And of course, as you play down through the chain, it will include containers and tankers, whether it's through the ghost fleet or the black sort of cargo that will move through other ports. So I think we in shipping have a role to play in taking the shock of this geopolitical event and distributing it safely through the world, and we will continue to do that. But the payback for this industry has to take into account the higher and more intense power we have now to make that change and translate that into more impactful consumer level, low cost increases that then pay for the transition, that pay for the geopolitical impact, that pays for the cost of COVID, that some parts of shipping are still reeling from. I'm taking away container shipping here because obviously they've have had supernatural profits, as one of my colleagues called it. But it is a challenge of the mind, of how we think about shipping, and that's obviously always the hardest thing to change.
Yep. Thank you, Joe. We have about a minute left. Thank you, Shreyas. Any final thoughts from the panel as we wind up here?
I just wanted to support Shreyas's comment about not quibbling over those 50 to 100 basis points. I thought that was very sage advice by Shreyas, and DNB is delighted to be here and certainly open for business and here to support our clients.
Thank you, Evan. Any other further thoughts? Well, we may end up about 30 seconds early, but I want to thank all of the panelists for their contributions and welcome and thank you for joining us and shedding light on your or giving us your views on the market and what your institutions are seeing. And I want to thank also Nick Bornozis and Annie Zhu at Capital Link, the whole team there for hosting the panel and letting us share thoughts.
Thank you very much from my end. As expected, it has been a very interesting panel, very interesting discussion. And look, capital is one of the key topics for shipping. Shipping is a capital-intensive industry. So thank you to all for joining us.
Thank you, Nicholas.
Thank you, Nicholas. Thank you, everybody.
Thank you.